Hi students, welcome to another session of manifested online classes. So in this session, I want us we continue with the topic number 3, subtopic number 5, financial statement of cooperative societies. And specifically on this session, I want us we look on an illustration question regarding presentation of financial statement of a cooperative society. So I want us we go through the illustration and then we see what was required. So we are told Marura Farmers Cooperative Society deals in marketing of two brands of coffee, Safi and Mzuri, on behalf of the members. As per the society's bylaws, the society is allowed to retain 20% of the sales for Safi and Mzuri for operation and pay the balance to the members. The following trial balance was extracted from the books of the society as at 31st of December 2021. We have a trial balance there. We have expenses relating to Safi, which include marketing expenses, processing materials, processing wages, and then we have expenses relating to Mzuri, which include marketing expenses, processing materials, processing wages. Then we have loans to members. We have dividends from investment, accrued rents, salary provision, appropriation account, revaluation reserve, statutory reserve fund, entrance fee, share capital, members deposit, salary creditors, bank overdraft, interest on loans to members, and then we have traveling expenses for staff, for committee members, bank charges, bank interest, salaries and wages, committee education, committee seating allowance, printing and stationery, general meeting expenses, members education, entertainment, legal fee, cash in hand, Wakulima Bank Limited savings, investment in Wakulima Bank Limited, receivables from members, receivables from non-members, and then finally we have equipment. Then we have some additional information. Number 1, we are told Bora Limited market Safi and Mzuri brand for Marura Limited. On 31st of December 2021, Bora Limited sold Safi and Mzuri brands for $175,000 US and $115,300 US respectively. Bora Limited remitted the above amount to Marura Farmers Wakulima Bank on 15th of January 2022. Marura Farmers Cooperative Society does not maintain a US dollars account in Wakulima Bank. So as far as that information is concerned, it is important to note that this company, which is called Bora Limited, which you're told market Safi and Mzuri brands on behalf of the Cooperative Society, this is like an agency. This is just like KTDA, which is responsible for marketing and selling tea on behalf of various tea factories. So once KTDA sell tea, it remit now money to the bank account of various tea factories, and then which will be able now to pay their farmers. The same case with this particular Bora Limited is an agency of Marura a cooperative society. It market and do what? Sell those two coffee brand on behalf of that cooperative society. So therefore, once it sell, definitely it remit the money to the bank account of the cooperative society. But because you're given the sales in US dollars and the other figures are given in shillings, we have to translate those particular sales into Kenyan shillings, and automatically we're going to translate them using the exchange rate which was existing at the date the money was sent. I hope you can see we are told the money was sent or was remitted on the bank to the bank account of Marura Farmers Cooperative Society on 15th. So that is the exchange rate we are going to use. So in number 2, we are given the exchange rate for the two currencies, as shown below. So we're given the exchange rate on 31st of December 2021, which was 105 shillings, which was equal to $1 US. And then on 15th of January 2022, $1 US was equal to 100 Kenya shillings. Automatically, in this case, we have said when translating the sales for the 2 coffee brand given in the information number 1, we are going to use the exchange rate on the date the money was remitted to the bank account. That is on 15th of January 2022. Number 3, we are told audit fee of 6 million is to be provided for. Number 4, salaries and wages amounting to 3.2 million had not been paid. These are accrued salaries and wages. 5, interest on members' deposit is to be provided at shillings 6.08 million. And then finally, we are told, as per the relevant ministry's regulation, cooperative societies are required to transfer 20% of their net earnings to statutory reserve fund. This is something I mentioned in the first topic or in the first lesson of this particular topic, that cooperative societies are required to 20% of their net profit to a statutory reserve fund. So what are we required as far as that question is concerned? We are required to prepare the following financial statement for Marura Cooperative Society for the year which ended 31st of December 2021. Number 1, Safi Brad marketing account showing the profit and loss. Number 2, Mzuri Brad marketing account showing the profit or loss. And part C, statement of profit or loss for the year which ended 31st of December 2021. And finally, statement of financial position. So as far as the first two accounts are required, part A and part B, whereby you're required to prepare the marketing account of the 2 coffee brands, we're required to prepare those 2 accounts basically to show the profit or the loss which was realized from selling these 2 coffee brands. And what we are going to do, we are going to take now the sales, the sales of the 2 coffee brand, which is given in the additional information number 1. And then there is some information which are given in paragraph 1, that this cooperative society is required to retain 20% of the sales and automatically remit the rest, which is 80% now to the members. So once we take the sales given in number 1, and we determine the amount to be retained, which is 20%, the amount to be paid to the members, which is 80%. Then we are going to less now the expenses, specifically relating to those 2 coffee brands. So we start with part A. Part A of that particular question. We are required to prepare a Safi brand marketing account, which is for the year which ended 31st of December 2021. 31st of December 2021. So in this case, we need to have just a single column here, and our figures are in thousands of shillings. So what do we start with here? We start with the sales. The sales from this coffee brand, and we are given that information in additional information number 1. We are told the sales from this coffee brand, that is a Safi, it was $175,000 US dollars. 175,000 US dollars, because these sales are in US dollars. So what we need to do, we need to translate these into Kenyan shillings. I've said we are going to use now the exchange rate when the money was remitted now to the bank account of the cooperative society. The money was remitted on 15th of January 2022, in which case now the exchange rate was 100 shillings, which was equivalent to $1 US. So we multiply that with what? With 100, so that we get the final figure here. So let's get the final figure. So this is 175,000. 175,000 then times 100. So that will give us 17.5 million. Take into account our figures are in thousands of shillings. So that will be recorded there 17,500. Then what you are told is that out of these particular sales from these 2 coffee brand, now the cooperative society has to retain 20% to cater for the expenses associated with marketing and selling this particular coffee brand. And then 80% of these sales will have to be paid to the members, or basically to be distributed to who? To the members. So therefore, the first thing we need to do, even before we list now the the expenses. So first of all, we have now to deduct amount due to members. Amount due to members. And basically, in this case, we have said the amount due to members is 80%. Amount due to members. That amount due to members, in our case, we have said is 80% of these sales, because we are told the cooperative society is supposed to retain what? Supposed to retain 20%. 20%. So what is 80% of 80% of this? 80% of 17 500, which will give us 14,000. So this is the amount now to be paid to the members, meaning that the amount retained by the cooperative society, and which is now 20%, is how much? Is 35. So basically what that means is that this particular amount should be equal to, this amount should be equal to 20% of this. Maybe you can just confirm 20% of 17 500. That should give us 35. That is the amount to be retained by the cooperative society to cater for the expenses associated with marketing and selling this coffee brand. So then what we need to do is basically to go ahead and list now the expenses. We list the expenses. So we are given the expenses, or we're given specific expenses relating to marketing and selling this coffee brand. And those particular expenses are given in the trial balance. I think the first item in the trial balance, we have the expenses associated with marketing and selling Safi. So we have marketing expenses, which is an amount of 640. We also have processing materials, an amount of 860. And then we have processing wages, which is an amount of 900. Yes, an amount of 900. So wherever you get down there is basically now the profit which this particular cooperative society was able to get from selling this coffee brand. So 35 minus 640 minus 860 minus 900. So this will give us 1100, and basically this is now the profit for the year from selling and marketing this particular coffee brand. So basically that's what the examiner was requiring there, and you can see how many marks were allocated there. The marks allocated were 3. So for recording basically these particular items here, the sales and these particular expenses here, then you had to get those 3 marks. So let's move to part B of that particular question, part B of that question, and we are required to prepare now a marketing account for the other coffee brand, which is Mzuri brand marketing account, which is equally for the year which ended 31st of December 2021. So our figures are in thousands of shillings, and we're following the same format. We start with the sales of this particular coffee brand, and that is given in the additional information number 1, which was 115,300, but this take into account our US dollars. We have to translate that to Kenyan shillings using the exchange rate which existed on the date this money was remitted to the bank account of the cooperative society, and this will give us or that is 11,530,000. So just like what we have done here to this, we need to less the amount due to members, the amount which was supposed to be paid to the members from this particular sales. So we less amount due to members. In this case, we have said the amount due to members is 80% of the sales. 80% of the sales. And then what we get here is the amount retained by the cooperative society to cater for the expenses associated with marketing and selling this particular coffee brand. So 80% of 11,530. Okay, we can take that again. 80% of 11,530. Yes, that will give us 92.24. That is the amount which was due to members. And then how much amount was retained here? We deduct that from 11,530, which will give us 23.06. So this is the amount which was retained by the cooperative society and which was supposed then to cater for the expenses associated with marketing and selling this coffee brand. And we are also given those particular expenses. Those expenses are given in our trial balance there. So what we just need to do is to record them here. So we have marketing expenses. Marketing expenses, an amount of 150. And then we have processing materials. Processing materials, an amount of 320. And then we have processing wages. Processing wages, which is an amount of 30. Yes. And then from there, what we do, we get the profit for the year. The profit for the year from this coffee brand. So what do we have here? We have an amount of 2306 minus 150 minus 320 minus 30. That gives us 1806, which is now the profit for the year. Equally, that is what was required as far as part B of that question was concerned. And these are some of the items which were marked as far as that part is concerned. And by doing that, you get now your three marks. So let's move to the other part of that particular question, that is part C. But even before we do that, there is something we need to note here, which is very, very important. One, when the year was coming to an end, this particular agency, remember we have said that this cooperative society has an agency, which is called what? Bora Limited. As per the information given in note 1, this agency had not limited this amount of money to the bank account of the cooperative societies at the end of the year. So therefore, this amount here, 17,500, and also this one, 11,530, it was an amount which the agency owed to the cooperative society. So therefore, in preparing our statement of financial position, this particular amount plus that one, because it is the amount which the cooperative society was expecting, it will be recorded there as an asset. So basically, we refer to that as the amount now to be received, or the amount receivable by the cooperative society from that agency. On the other hand, this particular amount which was due to the members, 80%, this amount was not yet paid to the members of the cooperative society when the year was coming to an end. And therefore, in preparing our statement of financial position, this one will be recorded there as a liability. because this is what the cooperative society was supposed to pay to the members, it had not paid that amount. So therefore, it is important to note that. Let's move to part C of that question. In part C, we are required to prepare now a statement of profit or loss for the year which ended 31st of December 2022. Now, this one is prepared to determine the profit or loss for the entire cooperative society. Remember what you have prepared in part A. Part B is prepared to determine the profit from marketing and selling the 2 coffee brand. So part C, we are required to prepare a statement of profit or loss, statement of profit or loss, which is for the year which ended 31st of December 2021. 31st of December 2021. So in this case, we need to have 2 columns. And we prepare these by comparing the incomes of a cooperative society with the expenses. With the expenses, automatically we start with the incomes and then we less the expenses. So which are some of the incomes of this particular cooperative society? So even before you go back to the trial balance, because we know our cooperative society is responsible for marketing 2 coffee brands on behalf of the members, we know that from marketing of the 2 coffee brands, there was a profit of 1100 from marketing and selling of Safi, and 1806 from marketing and selling of what? Muzuri. So that is the first source of income to this cooperative society, and that is what we bring here. So profit from the 2 coffee brand Safi, which is a figure of what? Of 1100. And then we also have the profit from the other coffee brand, which is Mzuri, a figure of 1806. Then what we need to do, we go back to the trial balance, we check the other incomes of this cooperative society. It's important for you to remember all incomes have a credit balance. So when checking for incomes from the trial balance, you check the items on the credit side of the trial balance. So the items on the credit side, I think the first item, we have dividends from investment, dividends from investment. Dividends from investment is a figure of 470. Below that, we have accrued rent. Accrued rent, these are liability. Sundry creditors is a liability. Appropriation account, these are like the retained profit at the start of the year, which is not an income. Revaluation reserve is a component of equity. Statutory reserve fund is a component of equity. And then below that, we have entrance fees. This is still an income to a cooperative society, and these entrance fees is a figure of what? Is a figure of 300. Below that, we have share capital, members deposit. None of those is an income. Sundry creditors, bank overdraft, all those are items of liabilities. And I think finally we have interest on members' loans. Interest on members' loans, members, or interest on loans to members. Remember what you have said is that once a cooperative society give loans to the members, a cooperative society definitely will have to charge some interest. That interest charged by the cooperative society is basically what? Is an income. Yes. So I think those are the only incomes which we have. So then what we need to do is to get the total incomes. So let's add all those figures so that we get the total incomes. We have 1100 plus 1806 plus 470 plus 300 plus 35 890 35 890. Okay, Yes, that will give us the total incomes of 39,566. Yes, after getting the total incomes, what do we do next? We proceed and we less now the expenditures. The expenditures of these cooperative societies, expenditures of the cooperative society. So here we have a number of expenses, and before taking the expenses in the addition in the trial balance, it is always advisable first of all deal with the expenses affected by the additional information. Let's go to the additional information. In the additional information, number one, I think we had information about sales of the 2 coffee brands. That has nothing to do with the expenses. Number two, the exchange rate that do not affect expenses. And then number three, we are told audit fees to be provided for. Audit fee to be provided for, that is an expense. But equally, because we are told this audit fee was provided for, it means that when the year was coming to an end, this audit fee had not been paid. Meaning that in our statement of financial position, there is a liability. So we have audit fee of 6 million, but remember all our figures are in thousands of shillings. And then number four, we are told staff salaries and wages amounting to 3.2 million had not been paid. So we have staff salaries and wages. So what we do, we take the amount which was not yet paid at the end of the year, which is 32, and then we add to this, we add the amount which had already been paid, and this is the amount appearing in the trial balance. So the amount appearing in the trial balance as the staff salaries and wages is a figure of what? Yes, is a figure of 2290. 2290. So we add the two figures, so that now we get the total staff salaries and wages for that year. So we have a figure of 3,200 plus 2290. So the total staff wages and salaries for that year is a 5490. So let's go to note number 5. Interest on members' deposit is to be provided for. Remember, in this case, we have said that interest paid to members based on their deposit, this is an expense. This is an expense. And equally, it is also important to note that this amount are not being paid. It's just provided for. So therefore, still in preparing our statement of financial position, this will be a liability. So I think we are done with that point. And then number 5 is all about the amount to be transferred to the statutory reserve fund. That is not an expense. So what that means is that we go back to the trial balance which you are given, and we pick now all the other expenses. It's also important to note that all expenses in the trial balance, they have a debit balance. So we check the items on the debit balance, on the debit column of the trial balance, that is. And I think we can start from where we have traveling expenses. That, I think, where we have the first expense. It is important for you to note that we have some expenses which relate to these 2 coffee brand, Safi and Muzuri. And because we captured those particular expenses here in preparing this particular account, we don't take into account those particular expenses. Those expenses specifically relate to Safi and Muzuri. What we are recording here are the general expenses relating to the cooperative society. So we have traveling expenses for staff and committee members, a figure of 80 and 100. And then we have bank charges, an amount of how much? An amount of 200. We have bank interest, which is a figure of 890. Then below that we have salaries and wages. We have already dealt with that here. And then we have committee education, that is the other expenditure. Committee education, which is an amount of 1,000. Below that, we have committee seating allowances. This is committee allowance. We have committee. Okay, this is a committee's education. Committee's education, which is 1,000. Then we have committee seating allowances, which is a figure of 1110. And then we have printing and stationery. Printing and stationery. So printing and stationery, we have a figure of 2050. And then we have general meeting expenses. General meeting expenses, an amount of 500. Below that, we have members education. Members education. Members education is a figure of 1,500. And then below that, we have entertainment. Entertainment. Entertainment is a figure of 50. And then next and finally, we have the legal fees. The legal fees, which is a figure of what? Of 400. So those are, I think, the various expenses which relate to this cooperative society. I hope we have not skipped any. Yes. So what then we need to do, we need to add all those particular expenses of this particular cooperative society so that we can be able to determine the profit or what the loss for the year. So let's add all these particular expenses, starting from where we have audit fee 6,000 plus 5490 plus 6086 plus 80 plus 100 plus 200 plus 810 plus 1,000 plus 1110 plus 2050 plus 500 plus 15 plus 50 plus 400. Yes, so that is giving us a total of 376. So what we need to do, we need to less that now from the total incomes which we have here. We deduct that from 39,566. So that will give us the profit for the year. The profit for the year of 14,190. 14,190. So basically that is it, that what is required as far as that part was concerned. Preparation of the statement of profit or loss, and in that case now the examiner had given how many marks? The marks were allocated to that were six. So by recording those particular items of incomes and expenses, you had to get now 6 marks. So finally, let's prepare now the statement of financial position as required in part D of that particular question there. So you prepare statement of financial position. Statement of financial position. That is part D. You can just refer to it as abbreviated as SOFP, as at 31st of December 2021. 31st of December 2021. So remember, you say that this is a statement of assets, liabilities, and equity. So we just need to have a single column here. And we start by recording assets. And remember what we said in our first session. As far as this is concerned, we don't need to classify the asset into non-current and current. We just record asset starting from the most liquid to the long term. And I think we are given the asset starting from where we had our last expense, the legal fee. Below that we have cash in hand. Cash in hand. The cash in hand is a figure of 540. Then below that we have Wakulima Bank. Wakulima Bank Limited savings, which is an amount of 6780. And then we have still investment in Wakulima Bank Limited. Wakulima Bank Limited, which is a figure of 6550. Then below that we have receivables. We have receivables from members, which is a figure of 2960. We also have receivables from non-members, a figure of 22,500. And then we also have office equipment. Office equipment is a figure of what? Is a figure of 900. Yes, so I think those are some of the items which we have in the trial balance. But I think also below the various expenses relating to Safi and also Mzuri, we have now the loans to the members. Remember, we have said that once a cooperative society has given loans to the members, advanced loans to the members, these particular loans to the members to a SACCO or even to a cooperative society is an asset. The cooperative society expects now the members to repay back that amount of money. So basically that is an asset. Then what else do we have maybe from the additional information? From the additional information, number one, we have now the amount which this cooperative society was yet to receive from the marketing agency, which is Bora Limited. So we can just refer to that as the amount due. This is the amount which was not yet remitted to the bank account of the cooperative society by the marketing agency, which is known as what? Bora Limited. And this amount, because it is given in terms of US dollars, we have now to convert that now to Kenyan shillings. So we take the sales from Safi, 175,000 US dollars. We can just take it as 175. And then from the other coffee brand, 115.3. And then we get the total. We translate that now to the Kenyan shillings by multiplying that with the exchange rate on the date the money was remitted. So we have 175 plus 115.3 times what? Times 100. So this is the amount of money which now Bora Limited was yet to remit to the bank account of the cooperative society. So therefore to the cooperative society, this is basically an asset. So that's what we have in note number 1. Additional information, note 1. Note 2 has nothing to do with the sales. Note 3 is that is a liability. Note 4, that is still a liability. And then number 5 is still a liability. And then number 6, this one will affect now the appropriation account. I'll be able to show you now the necessary what? Adjustment we are going to make as far as that is concerned. Yes, so what we need to do here is to get now the total assets. So let's add all these assets starting from where we have 540 plus 6780 plus 26,550 plus 2690 plus 22,500 plus 900 plus 972 340 plus 29,030 030. Yes, that will give us a total figure here of 1,061,330. So those are the total assets. Next, we record now equity. Equity, this one comprises of a share capital, members deposit, plus the various items of what? Of reserves, of which all these items, they have a credit balance. So let's start by recording the share capital of this cooperative society that is given in the trial balance. Share capital is given as a figure of 900. So then below that we have members deposit, which is a figure of 64,650. Yes, and then from there we have various items of reserves, starting with just above the share capital entrance fee, we have statutory reserve fund. This one will need to be adjusted because whatever you given there as a statutory reserve fund, this is a statutory reserve fund at the start of the year, and then what you're told as per note number 6 is that 20% will 20% of the net earnings is the same with the profit for the year, will be transferred to statutory reserve fund. So this should be 20% of what? 20% of this profit for the year. 20% of that what? Profit for the year. So it should be 20% of 14,190. So that we get the statutory reserve fund at the end of what? Of the year. So then below that, or basically above that, we have revaluation reserve. Revaluation reserve that remain the same, which is a figure of 750. We are going to compute that figure. And still we have appropriation account. Appropriation account, these accounts still, or these figures still need to be adjusted because what you're given there is the appropriation account at the start, which is what? Which is 6050. To this, we should add the profit for the year. The profit for the year, remember, is 14,190, but equally we are going to less the amount which was transferred to the statutory reserve fund, which is 20% of 14,190. 14,190, and we get now the appropriation account balance at the end of the year. So I think we have picked all the items of equity. We have picked all items of what? Of equity. So I think what we just need to do here is to get now these final figures, starting with the statutory reserve fund. So let's first of all get 20% of this, 20% of 14,190 plus 13,740. That will give us 16,578. What about the appropriation account balance? So we have we have what? We have 6050 plus 14,190, and then to that we less what? We less 20% of 14,190, and that will give us 17,402. Yes. So those are the items of equity. So what we then need to do is now to get the total equity let's get the total equity by adding all these items. Actually, starting from there, we have 1742 plus 750 plus 16,578 plus 64, 650 plus 900,000. 900,000, which will give us 999,380. So that is the total equity. Total equity. So what we need to do next, or actually finally, we need to record now the liabilities. We need to record now the liabilities. We need to record the liabilities. The liabilities. So we have various items of liabilities. Let's start with what we have in the additional information. In the additional information, number one, there is something, first of all, you need to remember that there was amount due to members. There was some amount which was this cooperative society was supposed to pay to the members, which was 80% of this amount, which was from the sales of the 2 coffee bread. So we can just compute that as 80% of this, 80% of 29,030. Although if you go back to what we prepared in Roman 1 and also all part A and part B, you can be able to see the amount due to the members as far as the sales of the 2 coffee brand is concerned. If you add those, the amount from Safi brand marketing account, Mzuri a brand marketing account, should be able to get the same figure here as 80% of the total sales of the 2 coffee brand. So we have 80% of 29,030. That will give us 23,224. This amount which this cooperative society was yet to pay to the members. So that's what we have in note 1. Number 2 is about exchange rate. Number 3, we have provision for audit fee. For audit fees, this amount was not yet paid. It was just provided for. So therefore, it is a liability, 6,000. And then number 4, we have accrued salaries and wages. Accrued salaries and wages is 3.2. And then below that, number 5, we have provision for interest on members' deposit. Members' deposit. Still, this amount are not being paid. It was purely provided for. That's why we are accounting for it as a liability there. I think with that, what we have. Yes. So let's then go back to the trial balance and we pick now the other items of liabilities. Remember, all liabilities, they have a credit balance. So starting from where we have dividends from members, below that we have accrued rent. Accrued rent, which is 470. Below that we have salary provisions. Salary provision 4950. 4950. And then down there we have salary creditors. Salary creditors, which is a figure of 3410. And then we also have bank OD, bank overdraft of 6150. 6150. Yes. So I think we have recorded all items of liabilities. None of the item which you have not recorded. None of the item which you have not recorded. Yes. So what we just need to do here is now we get the total. We get the total equity and liabilities. So for the total equity and liabilities, we take the total equity there and then we add all these items of liabilities. But let first of all we add these items of liabilities. We have 23,224 plus 6,000 plus 3,200 plus 60 86 plus 470 plus 4950 plus 3410 plus 6150. Yes, plus what we have there is 999 380. Okay, let me take that again. Okay, so we have what? We have 999 380, and then we have 23,224 plus 6,000 plus 32 plus 86 plus 470 plus 4950 plus 3410 plus 6150. Yes, so that is giving us the same figure there as 61 330. 61 330. So basically that is what was required in that part D of that question. These are the items now which were to be marked. The items to be marked, but definitely that particular statement of financial position, as you can see, there are so many entries, so many what entries, and basically by doing that, you are allocated 8 marks as far as that question is concerned. So that brings us now to the end of that particular illustration as far as the preparation of financial statements by cooperative societies are concerned. And I think that is the most recent question on cooperative societies. There is another question which was tested back in the year 2010. So if you can be able to access the past papers for 2010, you can be able to check a question which was tested. So I think was question number 4 from that particular sitting. So therefore, we stop at that particular point. See you in the next session as we move to a different topic.